Stop. Before you send in a check to the IRS for any money that you made on the primary sale of your home, you have to listen to this video first. Because in today's video, we're going to discuss how to not pay taxes on the sale of your home. Be sure to pass this video along to all your friends and family so that they can avoid paying taxes on the primary sale of their home also. Now, before we delve into the details as to how to sell your house and not pay taxes, I want to delve into the details with regards to why this video was made. See, a couple of weeks ago, me and some guys was just hanging out and we were talking about the interest rates. We were talking about it would be a good time to sell because there will not be many home buyers probably later because of the high interest rates. See, right now we're at a point in time where the actual values of the houses have gone up astronomically. And we know that if you're going to sell, this would be a great time to sell, especially before those interest rates go up. So we were just actually talking about the actual longevity of how each one of us had, been in our homes for a while. And one of the members actually said that, hey, I'm thinking about selling my house. And I just asked, I'm like, okay, well, how long had you been in your house? And he specified 15 years. And so my next statement was, okay, well, you meet the test. So as long as you own your house for 5 years and live in it for at least 2 of those 5 years, you can make up to $500,000 as a married individual. However, if you're single, you can make up to $250,000 without paying a dime of taxes on the sale of your home. So everyone looked at me and they were amazed and they weren't really understanding what I was saying. And I just repeated myself again. I'm like, look, if you sell your home, if you own it for 5 years and live in it for at least 2, you get to make up to $500,000 for the sale of that home, tax-free if you're married, and $250,000 tax-free if you're single. And again, they looked at me in amazement. And so one of the members had actually said that, hey, I wish I had known that because I had just sold my house. And he said that he had paid $6,000 in taxes to the IRS. And I was like, oh my God, you didn't just do that. He actually sent in $6,000 to the IRS. So the next thing that I did, I actually went to the IRS's website and pointed out to him and showed him in the publication where it specified that he could have taken up to $500,000 as a married individual or $250,000 as a single individual and not pay a dime of taxes. So coming up next, I'm going to show you the actual IRS publication where you can make up to $500,000 as a married couple or $250,000 as a single individual, where you get to exclude that money from the sale of your primary residence. So like this video, subscribe, and I'm going to show you in that publication where you can make these dollar amounts and not pay a dime of taxes. Okay, we're at IRS publication 523, selling your home. We're going to actually walk through the documentation as it relates to the sale of your home. I want to show you here. So it asks, does your home sale qualify for the exclusion of gain? So here in this section, it says the tax code recognizes the importance of home ownership by allowing you to exclude gain when you sell your home. To qualify for the maximum exclusion of gain, $250,000 if you're single or $500,000 if you're jointly, you must meet the eligibility test. So let's go into the eligibility test and see exactly what the criteria is. So step number 1, in terms of eligibility, automatic disqualification. So it says determine whether any of the automatic disqualifications apply. So your home isn't eligible for the exclusion if any of the following are true. So you acquired the property through a like-kind 1031 exchange during the past 5 years, or you are subject to expiret tax. And so what expiret tax is that if you don't claim U.S. citizenship, and if you claim citizenship in another country. So those two, 1031 exchange or expiate tax, automatically disqualifies you. So if these two areas of the 1031 exchange or the expiate tax doesn't apply to you, you meet qualification in step 1. Step 2 is with regards to ownership. And again, it says if you own the home for at least 24 months, and that's 2 years, out of the last 5 years leading up to the date of the sale of the closing. So what it's simply saying here is that, if you've lived in your house for at least 2 years of the 5 years of ownership, then you qualify. So again, I'm going to repeat that. You must own the house for 5 years, but live in it at least 2 years. So you meet the ownership qualification for step 2 if you meet this criteria. Step 3, residence. And it says determine whether you meet the residence requirement. And again, if you own the home and use it as your residence for the last 24 months out of the 5 years, then you qualify. So what it's simply saying is that, this must simply say that this is your primary residence for your home. All right, let's go down to eligibility number 4, and that's the look back period, right? And it says determine whether you meet the look back requirement. If you didn't sell another home during the 2-year period before the date of sale, or did you sell another home during this period, but didn't take an exclusion of the gain earned from it, you meet the look back requirement. You may take the exclusion only once during a 2-year period. So if you meet this look back requirement, then you meet the criteria. So let's go to eligibility step number 5. Now it talks about there are some exceptions to the eligibility test. If any of the following situations apply to you, read on to see if they may affect your qualification. If none of these situations apply, it says skip to step 6. So again, it talks about, a separation or divorce occurred during the ownership of the home. The death of a spouse occurred during the ownership of the home. The sale involved vacant land. You owned a remainder interest, meaning the right to own a home in the future, and you sold that right. Your previous home was destroyed or condemned. You were a service member during the ownership of the home, and you acquired or are relinquishing the home in a like-kind exchange, and that's the 1031 exchange. And you use the entire property as a vacation home or rental home after 2008, or you use a portion of the home separate from the living area for business or rental purposes. And again, these are exceptions to the eligibility test. So if none of these apply to you, then you move on to step 6, right? And step 6 simply says that the final determination of eligibility, if you meet the ownership, the residence, and look back period requirements, taking the exceptions into account, then you meet the eligibility test. So at this point, once you've met the eligibility test, you qualify to exclude, if you're single, $250,000 on the sale of that home, or if you're married, you can make up to $500,000 on the sale of that home and not pay any federal income taxes as a whole. Now, if you're an individual who has already paid the IRS taxes on the sale of your home and you meet these qualifications, I would just say get with your tax preparer and have them file an amendment. And you're gonna have to prove to the IRS that you meet these eligibility requirements. At this point, you're gonna have to send in all that documentation to pretty much prove to the IRS that you qualify to file an amendment. However, if you have not filed your taxes yet and you meet these eligibility requirements for the sale of your home, congratulations to you. You're good to go. This video has put you in a position where, you're educated now and you don't have to report that income if you meet these qualifications. So good luck to you. I wish you much success. And again, pass this video along to all family and friends. So be sure to forward today's video to all your family and friends because we want to make sure that they don't pay taxes on the sale of their primary residence if they don't have to. So if you really enjoyed today's video, you're definitely going to enjoy all of our upcoming videos that are going to be released on every Friday. So subscribe, like this video, and as a recommendation, I'm going to put a book in the description of this current video. And that book is by Dr. Ron Mueller. It is titled, "The Biggest Tax Breaks in America Belong to Home-Based Businesses."